Raymond Chan, he's a commodities analyst at Standard Chartered in London. Raymond, thank you very much for your time. Let's kick off with what we're seeing on the oil price. There is much debate out there as to whether we're going to $100 a barrel or whether we should be at lower levels other than the $85 a barrel level that we're seeing at the moment, more towards a $70 a barrel level. Where do you lie in that pretty wide range?
I think in the short term, oil price is likely to be range bound between $80 to $90 per barrel. Whenever you reach price at the lower end of the range, you probably pull out buyers and speculators, namely the hedge funds. But when you reach prices as high as $87, as we see last week, it's evident that a lot of investors are still keen to take profits. We've seen CFTC speculative positions for hedge funds longs has actually came down 11.5% on a week-on-week basis. So it is clearly indication that the market is still keen to keep $80 to $90 per barrel trading range.
Any chance that we can go back to those heady highs seen in the beginning of 2008 of some $147 a barrel?
We do have a supportive fundamental backdrop. We see demands actually showing improving signs as from the oil market reports from IEA and also OPEC recently showing that the world has actually higher and higher oil demand. But on the other hand, OECD inventories is still on a historic high, is on a relatively high level. It's still in the high end of 5-year averages. So I would say we probably need to have a more sustained economic growth in order to draw down stocks so that oil price can go higher. But in my opinion, is we probably won't see oil prices 120 to 140 level as we see in 2007, as there's more about speculation than fundamentals from at that year.
And then gold, looking at the fact that we're at $1,143 an ounce at the moment. There again are a wide range of forecasts. Recently on the show, I had somebody saying that gold should be at $800 an ounce. And I've got others, certainly the MD of American Precious Metals Advisors in the US, saying that we're going to $1,500 an ounce by year end. And beyond that, we're looking at $3,000 an ounce. So again, where do you lie on the spectrum?
Our view on gold is bullish on this point, especially in periods leading to interest rate hikes in the States, as we're looking for the US to hike the interest rate in the second half of next year. So it would make this coming 12 months a sweet spot for gold. So we still see at least 10% upside for gold prices. And also, obviously, gold is supported by central bank buying interests. As we see yesterday, Russia just came out and confirmed that they have bought 500,000 tons of gold in March. And also, gold has been supported fairly much by investors' interest, as we see record inflows into SPDR spot gold index, which is the biggest ETF funds of gold. So gold is likely to have a strong backdrop on the fundamental side, and technically the strength will still remain strong, and we expect it to drive to 1,200 in the short term.
Thank you very much for that target price. We're looking at $1,200 an ounce on the gold price in the short term, according to Raymond Chan at Standard Bank. Thank you.